Quarterly Perspectives with Bob Turner, Chairman and Chief Investment Officer of Turner Investments.
During the fourth quarter, the global stock market acted like stock markets should. By that I mean companies with the best earnings saw their prices go up the most. Our focus as growth managers is on identifying those stocks, and during the fourth quarter, our portfolios were rewarded for that in a very strong way. Sector aware, we are giving ourselves the flexibility of being plus or minus 5% to each sector within the market. So, for example, if we sell a tech stock, we're not necessarily compelled to go back and buy another one if we feel that perhaps a stock is more attractive in another sector. Through the added flexibility of not having to balance back to sector neutral, we're able to enhance returns over time. Growth does very, very well when economic growth is somewhat subdued. Investors value those companies, such as an Apple, that are going to grow their earnings strongly, whether global growth is at 5% or 3%. The good news as well is growth stocks are still cheap relative to value stocks when you look at historic valuations. So it really is the perfect backdrop for growth stocks. Tech was a sector that had the haves and have-nots during the year. The haves being the new technology companies, the have-nots being the old technology companies. So during the course of the year, for example, Broadcom is a new semiconductor company, was up nearly 40%. On the other hand, Intel, the old semiconductor company, was up 3%. We feel that tech, while trading at a discount even now to the market, can move to the leadership of the sectors during the course of this next year. Emerging markets are quite interesting. Last year we had Indonesia up nearly 47–48%, and China was down 15%. So you had a big disparity in performance among emerging markets. This year we'll probably get some of that, but I would say on average emerging markets will likely outperform developed markets, and I actually feel like China will play catch up and be an outperformer this year. Our feeling is that the market overall should do well in 2011 with growth leading that charge. If we had to pinpoint a number, I would say it would be about 15% advance for the course of the year. Why 15%? Well, our belief is that earnings go up 15% this year. That's been the story behind the market advance. Is we've had robust earnings off the bottom, nicely exceeding expectations now for 7 quarters. That should persist throughout the course of this year. So if earnings are up 15% this year, companies can be up a minimum of 15% also, and that doesn't even include share buybacks, companies buying each other, which could potentially drive the stock market even higher.
Quarterly Perspectives with Bob Turner. Produced by Turner Investments, an investment firm based in Berwyn, Pennsylvania. Since 1990, Turner Investments has been managing stock portfolios and mutual funds for institutions and individuals.